Welcome to Whatifi. We help financial decision makers visually create and share what-if cash flow projections with their stakeholders. That can include clients, teammates, and investors, all in seconds. In this video, we're going to cover key Whatifi concepts, including the scenario canvas, events, and threads. We're going to look at an example customer growth scenario. We're going to highlight per event graphing, and then lastly, we're going to look at a more detailed profit and loss budget scenario. With Whatifi, stakeholders can build scenarios in seconds. These scenarios are easy to share and collaborate with in real time. They're presented in a way that people can actually understand, and it allows all of the team members, investors, and stakeholders to be able to see problems well before they happen. Whatifi calculates differently. Instead of rows and columns and formulas in a spreadsheet, think of every calculation in Whatifi more like a video clip on a timeline in an editing software package. Each of those clips has a start, an end, and can be slid along that timeline to change when they begin, when they end, and their duration. Also, like a video editing timeline, you can have a clip, and then on top of that you can apply various calculation filters to modify that data all in real time. Whatifi starts with source data, whether that's QuickBooks and Xero, spreadsheets, or third-party APIs. Data, account data, is pulled into Whatifi in real time. Underneath Whatifi is a full chart of accounts and ledgers, which means we're not just adding up numbers, we're actually assigning calculations to a full suite of chart of accounts and ledgers. In the baseline is stored everything that is real in a user's profile. That can be a lease, pricing, employees, costs, etc. From there, users can create multiple different scenarios. These scenarios are made up of events. Each event is like a tab in a spreadsheet that contains all of the business logic to make a calculation. Within each scenario, you have a scenario thread that can be an A or B type situation and funnel into goals and KPIs for calculations. And lastly, all of that data can then be exported out to third-party dashboards, CSV files, Excel, or managed entirely within our platform. So let's dig into Whatifi, and let's start with a sample software as a service customer growth model to highlight how Whatifi works. This is the scenario canvas, and here we are connecting together a bunch of events to model out a use case of a software company that has multiple cohorts. They are looking at different types of customer growth patterns. They're looking at churn, customer acquisition costs, pricing, revenue, and KPIs. And we'll circle back to this modifier in a moment. Each of these are events, and we have a whole library of events. So for example, we have things like debit, credit, income, expense, banks, and loans. In our business module, we have common things like employees and customers, contracts, growth, customer acquisition costs. And then we also have a whole library of utility events that are used to perform sort of top-level filters on that. So we have groups and goals and customer transfer events and modifiers. They're all very powerful, and we'll explain those in a bit more detail later. So here we first establish two customer cohorts. There's cohort 1 with 50 customers and cohort 2 with 200 customers. That information funnels down from event to event to event. So in this particular path here, we are saying, hey, we would like to take all of our customer cohorts and grow them 10% month over month. In this second thread, we're doing a different calculation. We're saying, well, what if instead customer cohort 1 grows by 15%, but customer cohort 2 has a dynamic growth pattern, assuming product market fit over time, getting marketing costs down, more features. We're expecting that growth to grow over time. Both of those threads then funnel into a customer churn event. We have customer acquisition costs, saying cohort number 1, for example, is $25 to acquire a customer. But cohort number 2 is dynamic, and that over time we'll get it from $80 to $70 to $65 to acquire a customer cohort 2. Pricing. We have two pricing products here, one for $40, one for $85, and we're including a cost of goods sold. That funnels into a revenue event where we're multiplying customers times products. And at the end of the stack here, we also have a KPI event where you can calculate everything from ARPU to LTV to CAC to LTV ratios, things like that. So what does that give us? It gives us 2 scenario threads. Each thread represents a unique path through this canvas. And what our algorithm does is every single day it passes through each thread and calculates everything. Account balances, cash flow, cats, dogs, whatever is in our chart of account and ledgers at that time gets calculated for easy comparison. So I can sort all of this by cash flow to understand both monthly and cumulatively how each of those scenarios play out. We can look at other things like customer counts or average revenue per user, whatever's kind of required in these particular models there to run calculations. You can look at these scenarios through common lenses like a graph, and we can choose to display both of those on the canvas at the same time. We can look at our monthly cash flow over time or our cumulative cash flow over time and understand where this particular model has this company in trouble, and then what kind of actions they need to do to course correct. We can look at their customer counts here at the same time and understand what their total customers will be and also their customers month over month. We're also able to drill down a layer and look further into a calculation. It's one thing to see the final result of a calculation, like our customer counts, for example, but it's another thing to understand how we got there. We call this feature per event graphing. We can drill down a layer into a single scenario thread, and here we can choose to look at a particular account type, and then we can also choose to either A, switch to cumulative mode. Cumulative mode allows us to step by step work our way through each of these events and cumulatively see how our calculations change over time. So for example, here you can see the customers getting added in and then also churned out bit by bit. We can switch to individual mode, and individual mode allows you to see only the calculations that are taking place in that event. Only the calculations in this event, or only, for example, our churn here. You can also then bring yourself back up to this top level and again compare between those 2 scenarios. Let's go a little further with this one. We can take a look at a modifier event. In a traditional spreadsheet, if you wanted to try out a different value, you would either have to replace a value or duplicate a tab to try to create 2 different versions of that scenario. Here we have what's called a modifier event. And a modifier event will modify an upstream event but not actually change the value. It's more like a filter getting applied to that value temporarily. So for example, here we are saying, what if we, on July 1st of 2023, take the price of our product number 1, which is currently $40, and raise it by 25%. So if I unbypass this event, everything will recalculate, and we can now see the price difference and the cash flow difference. Let's even take a look at our income here, and we can compare these 2 scenarios now to see what that new price change does to our scenario over time. We can also toggle that event back off again and take it out of our calculations and see the difference between those 2 scenarios. Now let's take a look at a more ambitious Whatifi. Here we are representing a full P&L statement, but we also have 8 different concurrent what-if scenarios that are all calculating here in real time. This top line represents a standard budget where we have all of the profit and loss categories that would normally be on a P&L statement. And inside of each of these can be multiple different iterations and layers to that. So for example, we could have all of our different software packages listed here one by one by one. Off the top, let's take a look at what this looks like on our graph. And we're able to see all 8 of those scenarios. We can look at our cash flow calculations and see how wildly divergent all of these different scenarios potentially can be. We can look at that as just pure revenue, pure expenses, or drill down into some of the individual categories there that make up the total. Keep in mind you can also look at any of this in a spreadsheet type view here, where you can see the full chart of accounts and ledgers across all 8 of these scenarios here in real time. Let's take a closer look at our instancing workflow. In a normal spreadsheet, if you had 3 different types of contracts, all with different start dates, end dates, milestones, net payment terms, and percentage payouts, it would be incredibly challenging to model all of those multiple contracts in an Excel spreadsheet. Even more challenging would be instancing many versions of those contracts across a timeline. Using our instance event, which is one of our power events, a user can say, I would like to take contract number 1 starting in June, and I would like to instance that across my timeline 5, 2, multiple times per month there to form a true calculation pattern for that revenue. In this scenario, we're doing that for contract 1, contract 2, and contract 3, and that allows us to see here a much more accurate revenue calculation, including all of the lumps and bumps and when that revenue will really be recognized, as opposed to a generic budget that just assumes certain revenue coming into your bank account each month. Now let's look at modifiers. As we talked about before, modifiers allow a user to modify an upstream value without actually changing it for temporary calculations. Here we are saying, what if we modify in our budget a 10% decrease in revenue? We're doing the same thing with a 20% decrease. And as a proof of concept, we're saying, what if we decrease by 90%, but that doesn't happen until September 1st of 2022. So here now, we can also look at income cumulatively and see what those 2 scenarios look like and how they sort of play out over time and what that impact is on the cash flow of this particular company. In scenario thread number 3, it is quite obvious that this company is in trouble effective December of 2022. It's one thing to view a scenario in Whatifi, it's another thing to build one. As a bonus, let's take a quick look at how easy it is to build scenarios in Whatifi. Events can be inserted anywhere along a stack. You can pick from our drop-down menu here, like adding a debit-credit event here, and drop something as a placeholder to come back and be edited later. Events can be copied, and they can be pasted. They can also be branched. New scenarios can be added from our library. Here we're looking at recently used events, like a expense event. And then events can also easily be connected together. And just like that, we've added multiple events to our scenario here, all in real time. Whatifi is a game-changing approach to rapidly building, modeling, sharing, and discovering your what-if scenario options are for you, your clients, your teammates, and your investors.